Last Friday, we saw Hong Kong-listed Chinese stocks rocket to the moon for a brief moment before settling down on Earth. So for context, 9988, which is Alibaba's Hong Kong ticker symbol, opened at around 64 Hong Kong dollars, and in the day, it went up to $76 before closing at 70. 76 divided by 64, that's a 19% move. What's going on? Similarly, Tencent opened at 224 and the highest it went was 247, and that's a 10% move. Meituan opened at 145, highest it went was 159. You get my point. So it had a spillover effect over the US listed Chinese ADRs, and they also closed green across the board. So these sort of crazy candlestick patterns should be kept in the crypto market, not the equities market. Anyway, I think there were three main reasons that essentially caused these sort of movements: the Chinese-German relationship, the audit inspection, and the supposed pivot in COVID-0. So I know many investors basically had an erection when they heard China is going to open up again to put an end to the COVID-0 strategy. But I will share my skepticism and thoughts at the later part of this video. So you know what will cause me to have an erection? Smashing that like button, of course. So remember to just help me do that small little favor. By small favor, I mean smashing the like button, not helping me get an erection, just so we are clear. This is crazy. Webull just extended their latest sign-up reward and it has never been better. So you can get up to $150 cash voucher if you fund and trade your Webull account today. So all you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade for a stock or ETF and one option. And that's a whooping 10.5% ROI on your initial capital. So for those of you who have been sitting on the sidelines for some time now, I think this is the sign to get yourself motivated. So Webull prides itself on zero commission trading. So let's stop paying commissions and use them to buy more Alibaba. So if you need another reason to sign up for Webull today, they are also giving out attractive referral rewards if you get your friends to sign up using your own referral code. But of course, you should do so with mine first. Wink wink. Don't let this 10.5% ROI slip away so easily. Link will be in the description. Thank you Webull for sponsoring this video. Now, German's Chancellor Olaf visited China on Friday to basically relook into the stiff relationship between China and Germany, to the point where it was coined as the most controversial debated visit in the country for the last 50 years. So long story short, there were many concessions being made behind the scenes that we will probably die without knowing. But both parties walked away rather amicably and there were many deals that were cut. So to cut through the theatrics, because none of us are really interested in the myriad of virtue signaling, Germany allowed Chinese state-owned companies to become a shareholder of a terminal at Germany's busiest port, while the approval of the BioNTech vaccines will be expedited for the use on foreigners in China. And more importantly, they also just signed a $17 billion agreement with Airbus to buy 140 aircrafts. Ouch! I guess human rights are worth less than $17 billion. Anyway, this probably shifted China's image positively by a small little margin, because the overhang of the US-China tension still remains. But I guess it's a breath of fresh air when a part of the Western alliance is still willing to talk to China today. That being said, many of these agreements amongst the two countries will probably only benefit the traditional companies in mainland China, those that distribute vaccines, for example, or are in the aircraft or maintenance industry. So why are tech companies affected? This then brings me to my second point. According to people familiar with the matter, the US audit officials completed their first on-site inspection on Chinese companies ahead of schedule. So to jog your memory a little, many of these Chinese ADRs still have the Holding Foreign Companies Accountable Act dangling above them. So to delist or not to delist, that is the question. Of course, if this rumor is true, many investors are essentially speculating that the Chinese companies passed the inspection with flying colours. On the flip side, however, they could have also failed so miserably that the PCAOB essentially gave up and ended it early. Who knows? Still, it is probably too early to determine if these companies have passed the audit or not. Now, this news is a lot more concrete than the Chinese-German shenanigans because it has a direct impact on companies like Alibaba, JD, Pinduoduo, NIO, etc. that are listed in the US exchange. But that said, the source is at best as reliable as Bloomberg gets, and I'll let you decide how much you wish to trust them. Now, here comes the real kicker. The 20% move on Alibaba is probably due to this alleged document that was surfacing online on Friday regarding a Q&A with Zheng Guang, the chief scientist and supervisor at the Chinese Center for Disease Control and Prevention. So I'll show you the document and how he looks. So take a cold hard look at this particular document and maybe you can advise me on how does this inspire confidence or inspire any sort of authenticity. So I will discuss about the contents later, but just tell me how does this one-page document move the Chinese market to such a huge extent? I don't understand anymore, and this led me to the conclusion that investors around Chinese equities are basically on Hopium right now. Everyone is basically hanging onto any potential good news that is unverified or unchecked. The conventional idea of buying the rumor and selling the news don't work with China. You should instead sell the rumor and buy the news here. Anyway, according to this debatable memo from unknown origins, it was suggested that Zheng commented on 4 fronts. 1. PCR testing will shrink by 90%. 2. They will reopen borders with Hong Kong in early 2023. 3. They are confident with the efficacies of the new inhalable vaccines. And 4. They believe that domestic vaccines are not inferior than foreign mRNA ones. Of course, I hope that China is able to close this chapter behind them. But to wish for a snap change in policy stance is basically hoping for the sun to rise from the west. Even if there is a relaxation of policy, it would just be a fine-tune rather than a complete 180 change. So overzealous investors can calm themselves down. So to dash your hopes and dreams, China officials just reiterated yesterday that they have a firm adherence to their zero-COVID approach, and they said that they will unswervingly adhere to general strategy of guarding against importation of cases and preventing rebound of domestic pandemics, while maintaining their dynamic zero-COVID strategy, whatever that means. So long story short, at least in China, you should probably wait for the disclosures from official sources. Now, my stance on this zero-COVID thing is relatively simple. The base case is that this is not going to be sustainable in the very long run. So China will and must open up sooner or later. Where many investors differ is on the timeline and the rate at which it opens up. So one thing for sure though, there are many hot money sitting on the sidelines waiting for all these sort of positive signals. If the major driving force of Friday's movement was really due to China's potential pivot, then on Monday, we are in it for a roller coaster ride. So my friend actually dropped me a text on Friday when Alibaba was mooning in the Hong Kong market, asking me to quickly exit before it tanks again. So for context, from my last buy-in at around 62, at the day high of 76, I was already up 22% on that buy. Truth be told, would I regret not selling on Friday when it tanks on Monday market opening? Probably, but I guess the game we are playing here is rather different. I'm not here to try to punt for 10 or 20% gains on Alibaba in 2 weeks. If I am, I'll be trading in and out of many stocks. So it could have been the right decision for me to sell Alibaba on many occasions and enter at a much cheaper entry price. But how many times can I be right by trying to time the ebbs and flows of the market? I don't know, and I'm not confident. And for those of you with that special talent, I'm happy for you. But I just don't happen to subscribe to that same philosophy. So I'll probably go down as the clown that held Alibaba all the way to $0. But just a side note, we don't know until the last bell goes. So with that, I'll see you in the next video. But more importantly, I will see you on the moon. Goodbye!